Good morning, everybody. It's a pleasure to be back. My name is Heritage Adisa, market analyst at HFM Nigeria. And as usual, we check through the markets, find out what the overall sentiment is, what the overall mood is in the markets, if it provides opportunities, and then how we can take advantage of it. But please, like always, remember that this is just a communication material. And nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investments in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning, in terms of the overall market environment, overall mood in the market, is another cautious start, right? Yesterday, we had risk off for most of late last week from Wednesday, Thursday, Friday. It's been solid risk off flows where risk assets have been down, equities have been down, high beta effects, particularly commodity currencies, have also been suffering, while the safe havens have been leading. So for today, what we are seeing are a little bit of pullbacks, a little bit of retracement, reprieve in this risk asset. But one thing that must put off my mind is nothing has really changed. As a matter of fact, it could even get worse. And we'll get to explain that now in a bit. What we're seeing right now is just a mere pullback and could just be seen as a breather. So don't get carried away, by that. I wrote down earlier, I said slight breather in risk assets after yesterday's, downside or yesterday's slump. Right, risk-sensitive assets are attempting a slight recovery after solid downside in yesterday's session, right? But don't forget that the overall negatives remain very evident. Tighter monetary policies amidst fear of recession, trying to curb, the tighter monetary policy trying to curb high inflation, right? Amidst fear of inflation, recession, right, continues to be a major fear in markets. And then we have FOMC meeting as well tomorrow, right? Ending tomorrow rather. You look at the equity space or the overall asset classes. Equities, for example, are trading mostly mixed. You look at the Asian side, are mostly down. European bounces and US futures are mostly high as well. But even the upside, if you compare it to the kind of downside that we've seen over the last couple of sessions, is merely just a pullback, merely just a breather. So you don't want to really get carried away. You look at the US 500, it bounced off its 3-month low, right? Right, bounced off it early in today's session, but right now it's finding some resistance again at 3,800. Right, overall, the big stories, yes, a little bit of COVID cases here and there, COVID talk here and there in China. There's still political issues in the UK, right? But mostly the focus remains on the dollar, right? Yesterday, we had reports from WSJ, that's Wall Street Journal, where the report suggested that the Federal Reserve may be considering a big 75 basis point hike in their meeting ending tomorrow. Now, this is way above market's expectations. Before now, it's always been 50 basis point, 50 basis point. But now, a 75 basis point hike would be a really big one as well in terms of the rate path, right? Markets have really started to price in so fast. Right now, we have about 96% chance that can happen based on markets pricing that in, which is a big one as well. It's really that big banks, major banks are also backing that idea. We have Goldman Sachs as well also on the back of that. Now, what's the implication of this? It's a big expectation. If the central bank eventually hike by 75 basis points, yes, it plays into the expectations, is a worse outlook for risk assets as well as equities, particularly, right? We will see further flow lower in the likes of equities, US 500 and the other ones, right? But one thing you want to also put back in mind is we're heading into a recession, particularly, right? So that means that if they are hiking by such big margins, yes, in a bid to curb inflation, it even worsens the case for the economy, worsens the case for equities, which is something that we want to also have at the back of our mind. But it also says that if the Federal Reserve really disappoints and don't hike by 75 basis points, or don't really paint a picture that that's really heavily on the table and was strongly considered, that could see the dollar make some solid downside repricing, and it could give equities a solid relief rally. So there's that to put at the back of our minds, heading into tomorrow's meeting. But so far today, markets are still trading mostly cautiously. Yes, so despite the moves that we have in equities, commodities, measures of volatilities are still trading a little bit more mixed. Bond yields are lower, right? But all of those moves are still barely marginal compared to what we've seen over the last couple of sessions. You look at FX, for example, the safe havens are mostly all over the place. CHF leading, you have JPY somewhere in the middle. Even the US is now crawling towards the bottom, far bottom of the majors, right? On the other hand, you have the euro, the pound, also somewhere close to the tops, despite the fact that the UK is still struggling with economic issues, right? Talking about slowdown in the economic growth, as well as even political uncertainty, right? So there's that to pay attention to. Antipodians, AUD, card mostly are at the bottom of the majors, in line with the overall weakness that we've seen so far over the last couple of sessions in equities. Now, I had this reason now. I said, you know, put at the back of our minds that we have big expectations for a 75 basis point hike by the Federal Reserve. And until we get that, until we get the meeting, it's likely we keep seeing push and pull, messy here and there price action, which wouldn't be so much of a surprise. But if the Fed fails to hike by 75 basis points, or at least point out that it was strongly considered in the meeting and remains very, very much on the table, a relief rally in equities, you look at the kind of downside we've seen in equities, right? You expect that equities will be more reactive to good news rather than bad news, right? So there's that to pay attention to. And you look at the solid rally we've seen in the dollar. So that means that it will be more reactive to bad news, right, for the dollar rather than good news. So that means that if the Fed fails to hike by 75 basis points or points in that direction strongly, relief rally in equities, upside in equities, and then downside in the dollar, we want to look out for. But for the meantime, right, for now, a little patience is required. You look at the calendar in the day ahead, not so much expected. Yes, core PPI expected for the month of May, but I don't expect much volatility from that, even though it also points into how much inflation has gone, but we'd like to see what that looks like. And in a couple of minutes now, we're expecting the zero economic sentiment for Germany, particularly for the euro as well. Now, quickly looking across board, just a quick snapshot. This is what I'm talking about. When we talk about the relief, we're talking about all slight bounce, we're talking about in equities. This basically, right? This is nothing compared to the kind of downside we've had since about Wednesday, Thursday, Friday, even going to Monday, Wednesday from last week and Monday this week, right? The downside has been massive. And what we are seeing so far is just a mere pullback. But the marginal move so far just gives you a picture, right, of the kind of things that we're having. So far, on the tech side, so for this month, we're down almost 10%. This week alone, this is just Tuesday, we're down almost 4%, right? But what we are seeing today is just a slight mere pullback. You look at the US 500 as well, a similar story there as well. So I'm not looking to latch onto this. And until we get the FOMC meeting, we might not really have that much, volatility. So, right, so just put it up in our minds. Right now, we are seeing slight pullback, but nothing says we cannot see continuous flush to the downside in line with the overall negatives. Nothing says we cannot see massive volatility, but so far, in terms of conviction of moves, it's not really there. And I'll be more on the patient side, heading into this session. Now, you look at the VIX, for example, right? Equity downside has seen the VIX push higher, right? But so far today, just a little bit of breather, pullback is what we are seeing. So it's not so much of a surprise. Oil prices. Now, this has been another interesting one. In yesterday's session, when we had so much downside in equities, high beta currencies, oil prices pushed higher. Yes, supply concerns have been one to pay attention to. And then so far today, we are still higher for the month, for the week, and even for today, right? But I mean, we're close to the highs, right? So just want to be very, very careful at levels like this. Now, if you look at the strength and weakness of currency, yes, CHF leads, you talk about CAD being weak, you talk about AUD being weak, but I'm not really feeling any of the moves right now. I think the mess is still very much evident. And until the FOMC meeting, it's not something I want to be caught, latching onto. Now, just a quick one, looking at, the kind of moves that we're seeing so far, right? Pounds USD basically not done anything much so far today, but it's what I'm looking for. I'm looking at USD JPY, yes. Now, what I really like to see is the Federal Reserve really disappointing markets, right? Markets expect a 75 basis point hike, but if the Fed do not hike by 75 basis point, because I mean, you look at the economic situation, it's really a middle spot, really a tight spot for the Federal Reserve. But if they don't hike, I mean, we will see a lot of downside on this particular asset. Now, you look at the kind of upside that we've seen over the last couple of sessions, it's been a lot. And then markets really don't move in a straight line. So that means that we could see solid push lower here. But I would like to wait and see what the Federal Reserve does in the meeting ending tomorrow evening, right? Having said that, you look at the calendar as well. I mean, basically not much there. But later today, yes, PPI expected, but I don't expect much volatility there. Yes, ECB Schnabel on the wires as well, right? Want to see how that comes out. And then we have economic sentiment for the Eurozone. Keep in mind that so far today, the negatives still remain dominant. Yes, so far today, we are seeing slight pullbacks. We call it a turnaround Tuesday, not really, but we're seeing some form of, pullbacks in risk assets. So there's that to the back of our minds. But in terms of convictions, until we get the FOMC meeting, I'm not expecting so much convincing moves, right, in markets as we had. But still keep risk minimal, keep it simple, keep it clean, and then we'll see ourselves a little bit later. If you have any questions, please do not hesitate to ask, and do enjoy the rest of your trading session. Goodbye for now.